Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Friday's low volume trading due to the US Independence Day holiday saw the Australian dollar slip slightly against the US dollar index amid a risk-off mood ahead of President Trump's July 9th tariff deadline. Domestically though, expectations grow that the Reserve Bank of Australia, or the RBA, will deliver a third consecutive 25 base point rate cut on Tuesday, lowering the official cash rate to 3.60. Additionally, this week, the Reserve Bank of New Zealand is expected to maintain its official cash rate at 3.25, while the US will release the minutes from the FOMC meeting as well. So do keep an eye on that because it may reflect on liquidity in terms of whipsaw price action. And no doubt the pressure is still there when it comes to Trump and Fed Powell, after President Trump again called for Fed Chairman Powell to resign immediately after the top housing regulator urged Congress to investigate Powell, rising concerns over the Fed's independence. As we turn to the technicals, the Australian dollar is still weak into the third consecutive day as it now trades slightly lower towards the support level of 65.30. Beneath there is the 60-day simple moving average, which is still seen as a key point around 64.1535. 100 points away, I know, but there is still in the middle of support at 64.90. Overall, though, this weakness could actually soon turn around, and if so, I do expect to see the market demand reignite the momentum and see a pushback towards the top side call of 66 cents and on towards 66.65 and reassess from there. The euro surprisingly managed to regain its momentum and posted slight gains on Friday in thin liquidity due to the Independence Day. Overall, though, the market should likely keep a focus on that 118 to around 118.5 as a potential target, as this trend is holding very well. Support seen around 117.40-45 and underneath there around 116.70. Turning to dollar yen, the market is still a little bit weaker, and I know that probably sound like I'm repeating myself very much, but I still hold the view down to 142 and eventually expect to see the move lower towards that key level of 140 and reassess. Any advancement should be limited with resistance in around 144.80 to 145.40-45. Sterling, well, the market was a little bit weaker, but overall holding its ground and still focusing, I believe, onto 138. Although the market has stabbed a few times to the bottom, but bargain hunters have shown where these peaks are and where these troughs are. And with the trend intact, eventually should see that rally on. Turning to commodities, the market is a little bit weaker and the technicals are still somewhat lackluster, and therefore could see a slight pullback towards the region of 3,320 area and then maybe down to 3,300. But where the trend line is, I feel the market may actually bounce from that area around 3,300 and eventually look on towards 3,350. Oil a little bit weaker, but still not broken out of this range since that sudden drop that we saw over a week ago. Nevertheless, the demand is expected to return anywhere from around 64.5 and a base seen around $63 a barrel. We could see the rally on to $68 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the new week.